Right. With me today is Anthony McCarty. He's the founder, managing partner of Alpha Kairos Asset Management. Anthony's going to explain what that means in a minute. I had no idea what it meant, but it was amazing when he explained why he chose that name. Now, his goal and passion is to create above market returns for his clients. As such, he's created an innovative new model that removes the pervasive incentives. I asked him, what the hell does that mean? And he explained it to me, so I'm going to get him to explain that to you. And low quality returns. Anthony's worked for over 7 years as a financial advisor and a financial planner, in which he's advised hundreds of clients and helped manage millions of dollars of clients' investments. Early on in his financial career, he learned trading and money management, and he became an apprentice of myself on our Sunday Insiders program and the training. And then he's had a varied career before starting his own career in finance. He used to, before working in finance, he was a licensed attorney and he worked in civil litigation. And prior to law school, he served in the US military as an intelligence specialist for the US Navy intelligence. Now, you see what Anthony says, and I agree with him, is his diverse background has given this unique analytical perspective an edge, because it's all about having an edge in the markets. What's your edge? When he's facing the challenges of trading and investing. Now, he seeks to give his clients a unique advantage, rarely seen in the wider investment public. He creates this unique fund built around providing a meaningful active management. And at a time when most funds struggle to beat the financial investment, that's where Anthony stands. Anthony, hi. Thank you for joining us today. I just want to ask you a couple of questions about these words. Alpha Kairos. Can you explain that to me? What does that mean?
I picked it as an ancient Greek word. A friend of mine who's he went to Stanford and studied ancient Greek, because I guess that's a thing. He told me about I was trying to struggle to come up with a name for my fund, and he said, use Kairos. And I'm like, what is that? And Kairos, the ancient Greeks, or the Greek language, has 2 words for time. Chronos, which kind of chronological, we always use that word, is just sequential. It's quantitative. It's just 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. The Greeks also specified as kairos, which has a qualitative, like permanent nature. A kairos is a time that actually matters. It's a moment of import. It's when everything happens. And I think for a trader, if you get caught up in the just sequential 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, you'll lose money. If you're looking for those kind of specific moments of import and you take advantage of them, that's where you can make money. So for me, Alpha Kairos is the first moment where everything happens, the first moment of import. So every time I see the name of my fund, I remind myself what my trading strategy is to wait for those moments.
Right, I like that. That's like what I always say to people. Jim Rogers says he just sits and waits until there's money on the floor, walks over, picks it up, and goes back down and sits down. Right, and this phrase, perverse incentives, what does that mean?
A perverse incentives is the one thing you kind of see this, I call it the life cycle of a mutual fund or any fund, is at a certain point they'll kind of create, for a fund manager or the business managers who run these funds, most of the time the best way for them to make money is to gather more assets, to create more assets, to gather more, to get more management fees. And the problem is at a certain time, sometimes relatively quickly, you have so many, the market reacts to the amount of assets that you put in each trading program. And at a certain point, they kind of destroy their edge, because while they gather more assets to make more money, they kind of reduce the ability to make money in the market. And at a certain point, either some funds the good ones will stop, but the majority of them, the kind of reasons why the average retail client hasn't seen kind of good returns is because they have so many assets to generate so much revenue for themselves that they can't generate returns for the client. So I wanted to create a fund that incentivized me and my business to always focus on returns for the client. And I think by doing that, you kind of a unique business model that you don't really see too often in the market. So
nice, I like that. So listen, let's go back to the beginning and tell me, why did you get involved in trading? What was it? What drew you to trading? Why trading?
I always had just kind of an intellectual interest in it. I always said, "Oh, I'd love to learn more of that." And then until I got my first job in finance, and obviously that kind of became a little bit more of an interesting way of looking at the market. I do always kind of tell people that being, your financial advisor, your financial broker, even he can be very, very, very good at what he does and very about trading. Trading is a very different way, a different animal. But for me, I had the interest of I ran into a guy while working in finance who happened to be a former trader for a high net worth fund for his bank, and he kind of gave me the first introduction to trading. And I can't even really tell you. I guess just it really appealed to me, the analytics of it. I like what trading asks of you. I like what trading demands of you. I like the analytical, competitive nature of it. It's fantastic. So that was my first introduction, is just kind of seeing that as a, in finance. And once I did that, it was my hobby there for a while.
So tell me what your journey was. What was your journey? How you got involved in trading, and
I,
then what were your early results like as a result of that?
I count myself as very, very lucky, and annoyingly so. Like I know it annoys you, because I had a very I had the fortunate of being introduced to trading by a professional who knew what he was doing, who was consistently profitable. So I didn't really have the chance of the blowing up the accounts. However, I realized very early on that I knew within 5 minutes of my first candlestick analysis lesson, when he kind of showed it to me, that I was going to make a career out of it. Literally that quick. Like the first lesson, I'm like, all right, I'm going to manage people's money with this strategy.
Whoa! Wait a minute. Wait. You see one candle, you go, I'm going to manage money. Tell me, what's the connection between one candle and a career of managing people's money?
I just remember seeing the first candlestick analysis where it looked at the market. I love the idea of looking at the market, not so much as rational decision making and all this stuff. It's human behavior. And there's two types of information. There's information that people will go out and not buy anything or not sell anything, in which case that information doesn't matter. And then there's information where people go out and buy and sell, which is you can track on a price chart. So for me, it really jived with a lot of my early experiences, especially as an Intel analyst, where that's how you track people's behavior, not necessarily what they say, but what they do. And so for me, it was just like, all right, this is it. This is my intro, like on just an instinctual level. And I love the kind of that way that made a lot more sense to me than a lot of the fundamental analysis that they kind of give you a lot of times. So for me, I just remember seeing that first interaction, the first 5 minutes of tracking, doing candlestick analysis. I'm like, all right, this is it. This is what I'm going to do. I'm going to be a technical trader, and here I am. I guess.
So hold on. Are you saying you didn't have any struggles, any fears, any frustrations whilst trying to learn to become a trader?
The hardest part about becoming a trader for me, and the biggest struggle, and what you and your trading really helped, was it's easy to find ways of people to tell you when to get in, when to get out. The problem is very few people will teach you what is it actually like, how you be a business, how do you run a business as opposed a trading business, as opposed to how do I take a trade. And that's the struggle for me. I could do decent trades, but I knew that there was a level of sophistication, a level of professionalism that I didn't have, that I really needed. um, and I just knew that at a certain point, the way I was trading, I hadn't blown up, but I had this inkling in the back of my mind that I'm eventually I'm going to do something wrong, and I didn't have the knowledge of what I knew, that there was stuff out there that I didn't know. And I think that's really hard for the average or the beginning investor, is to have somebody who can give you a comprehensive, not just trade you to take a trade, but give you an education in what it takes to actually be successful in the market. There's a difference between being able to eke out positive trades versus, okay, how do I make money in the market? So I think for me, that was my biggest struggle, is how do I put this together to be actually consistently profitable, as opposed to just being able to pick out good trades. And that sounds, I think for a lot of people, that, well, what's the difference? There's a huge difference once you're in the weeds, once you're in the moment. So for me, that was the biggest struggle, of finding somebody who could give me comprehensive, things like risk management, money management, how much money should I put into the trade, everything else. You'd be amazed how few, even successful traders, don't have too much good answers about that. Good answers for those questions. So for me, that was the struggle of finding the high quality instruction. Fortunately, I asked, again, experienced traders, hey, who's the best, trader I can find online? And they said you. So
how did they know of me?
They just knew from trading communities. Just they said, he's probably the premier trading, retail trader or trainer out there, and they just said, if you want to go from 0 to 10 about how to be a trader, he's probably the best example out there. And I had one introductory call from taking stock on the Sunday, and like, all right, that's it. I signed up the next day, and then the first time I could, I signed up to be an apprentice. So.
Right. Okay. So I just want to go back a second. You said most professionals don't understand risk management and position sizing. Why not? Why don't they understand that?
That's actually kind of surprising. I wouldn't say most professionals. I'd say a lot of professionals don't, or they have very. You got to understand a lot of times when you're working for a bank or an institution or a fund, you have to toe the party line, and you
Mm.
have very specific rules about how and when and why you can invest, and those rules dictate a lot of times even in any firm or in any fund, you have to make decisions. There's business decisions and there's investment decisions. And a lot of times they kind of have to do what they're told. They have to do what's based upon either laws or regulations or, just your managing partner's view of the market. So a lot of times they have set procedures where they just say, put this in there, A, B equals C, and that's what they do over and over and over again. Whereas the level of sophistication where you have expectancy or bite-sized risk or whatever. Example, like if you can only use if your fund will only let you use equities, only let you use stocks, they won't let you use much leverage. At that point, your risk reward is kind of skewed, and they just know, hey, I have to keep 100% of the money in the market if you work in a mutual fund, for instance. So in that way, their way of looking at the market is fundamentally different than what I think a retail trader should be, or certainly the way you teach, and the way I trade. So the ability to use leverage is hampered in a lot of cases. And I try to tell that people a lot. Like you're a professional trader who is actually working for a fund, for a firm. We have so many different pushes and pulling above beyond just making money that a retail trader who's solely focused on I want to generate high return has a significant advantage over even the most sophisticated, institutional traders. We are always concerned about drawdown. We're always concerned about client reactions. For the retail trader, the ability to just, hey, I'm here to make money. I don't care what happens. I'm here to do the long term. That is a massive edge that private retail investors will always have, so long as they focus on that.
Right. So they can outperform most funds because of the risk management and the parameters set by the organization where the individual can set their own objectives.
Oh yeah, absolutely. They can set, and it's really their own psychology. Keep in mind, I always try to tell people, clients are a herd that I'm trying to, I'm herding cats, whereas an individual is one person. So I would always say for a private trader, your big advantage, maybe your sole advantage, but the biggest one is your psychology. Whereas as a trader, I have to get out of a position that might have a lot of volatility because I don't want to put my clients through it. No, regardless of if I think the trade will work or not. However, an individual trader who's working for, okay, I'm just here to make gains. If your psychology is sound and they know their system, they can make a lot of money where me or any other even great trader can't take that position because we have to answer to people above and beyond just making money.
So what role then, based on what you just said, what role do you think psychology has in trading, being consistently profitable, growing massive wealth, and setting their family up so they can be financially free?
It is the role. I mean, that's the primary. That's the struggle. That's the job. That is the purpose. I mean, you can teach anybody you can give somebody a system of how to trade in a couple of weeks, but that doesn't mean they can execute it.
Right.
And so it's kind of, I always tell people, you can teach people how to box in a couple of weeks, but you put them in a ring and they get hit and they're going to panic. So it's the same thing. The market's going to come at you once you're in a competitive environment. How do you interact? How do you compete? It's a professional sport. And they always say, trading is a sport that I love to play because when you make money or you lose money, that's something that happens to your body. That happens to your heart, to your nervous system, to your lungs. And so being able to find ways of dealing with that stress, there's both the stress of success and this, the stress of failure and the stress of making a lot of money that's the goal. That's the job. That's what sets you apart. So.
Wow. Nice. I like that. Right. So listen, tell me this, because this is one of the first biggest things I hear back from people that when they come new to my community, and that is, okay, how do I handle losing trades? But they say, how do I stop losing? And then I say to them, you, as long as your system's profitable, you shouldn't be thinking about that. That's just part of the game. So how do you handle losing trades?
I honestly, for me, losing trades are, I think for me, the way I handle losing trades is having good money management, having a good exit strategy, knowing when and how I'm going to get out. But for me personally, it's not losing trades that scare me. It's winning trades. Big
Ooh.
winning trades are the ones that kind of that I'm concerned of, that I have to focus on making sure when I get that rush of like a 10 or 12 hour trade,
Mm-hmm.
I have to make sure to calm down. I have to make sure that I don't want to keep going. I have to make sure that I stay with my system and be patient. So for me, the losing trades should be handled 6 months before you ever take the trade. When you create your system, you should know, okay, I can do this 1R. Like you said, as long as you create a profitable trading or a profitable system, that handles any loss. Because at that point, oh, lost 1R, don't care. Because at that point, hey, the trade didn't work out. I had specified, I knew my risk. I saw the opportunity. I took it. It didn't work out. That's just no problem. I think by going through the back testing repeatedly and feeling that in your bones is what handles the losing trades. I think for me, the struggle is when I make a lot of money on the trades, is making sure that, okay, I'm going to be consistent, I'm going to be patient, I'm going to focus on my system and allow it to keep doing it. So,
Right. Because that makes a lot of sense. The amount of people I see, they're in a winning trade, and then they, oh my gosh, I got to take this off. I got to take this. This is my money. They start counting the profit as their money.
absolutely.
And and I say to people, listen, you know that song by the gambler? It says, never count the money while the money's on the table. You need to adhere to those words, because that song will make you consistently profitable in trading. And so let me ask you this: if you let's imagine you said there's one thing that most traders need, other than psychology, okay? One thing that somebody could use, and if they focused on this one thing, it could massively help them to transform their trading. What would be that one thing they would need to focus on?
The ability of money management, risk management are the same words, really, just different
Mm-hmm.
things. The ability to understand what you're doing over the long term. Like the people always say, oh, it's not your money till it goes to cash. I would even say it's not your money till you've done 20 trades. Like
Ooh.
even if I put it to cash, even if I've made money, great. I still have X number of trades. I have losing trades that I have to pay for down the road because that's part of my system. Every time, I have to take this batch of trades, and some win, some lose, but the majority of them I'll come out ahead. So for me, understanding that, really getting that in your head and in your heart, and just being able to trust that understanding of probabilities and just the back testing. For me, trading, I get the excitement of trading when I'm back testing. I want to find the process. I want to find I train myself to look at, that's where I find the money. The market is where I just execute it. It's boring. I just need to do it. Hey, that's when it happens. But it's looking through that system and understanding that that's where the money is, and in the back testing and because if you think just going to the computer and pressing buttons is going to generate cash, it's not an ATM, man. Like that should be that should be the easy part, the boring part. It's going back and trading, looking for the patterns and looking for the process and looking for the risk reward in the back testing. That's what they need to do, and understanding how to turn that into a money management risk reward process where you can eke out money over the course of 20 trades or 20 years.
Right. So let's imagine someone's done the back testing. A retail trader's done the back testing. They've worked out some sort of system. Can a retail trader become consistently profitable? Is
Absolutely.
that possible?
Oh yeah,
Because you get so many
absolutely.
people thinking, oh, I meet some people say, oh, I'm trading. I've given up. I just don't think it's possible. I just know if this is real. I think this is an illusion. I think this is what some educator's trying to sell me, right? Can a retail trader really become consistently profitable and achieve their financial goals?
I will. Okay, I will say that I will create a caveat. If you walking off the street, I don't care how smart you are. I actually had a talk with a surgeon just last week who was getting killed in trading, and one friend introduced me to him because he's like, he needs to talk to you. If the retail trader thinks he can walk off the street from whatever job he has, use his intellect and his common sense, and then beat the market, no, he can't. What you can't, if you're willing to change, trade, grow, open your mind, look at through different things, because the market punishes the common sense that everybody has. If you go in there, and I don't care how smart you are or effective you are, it doesn't matter. It's not a job of IQ. So I would say, could the average human being, without any change, without any psychological training, without any willingness to take lessons on and learn and grow and change and be different and admit you're wrong, unless they're just willing to say, okay, I'm just going to go in here and not do just be me and do this all, that person's going to lose all their money. However, if somebody is a retail trader and is like, I'm going to devote myself to this craft, I'm going to focus on improving my mind, I'm going to understand that I'm not there yet, but I can get there. And if somebody comes in there with that mindset, within a couple months, you could be consistently profitable if you're willing to devote yourself. Right. But it's that willingness to change and willingness to admit, hey, I didn't know what I was talking about. So that's the hard part.
Right. Earlier we were talking about something, and I said, "Oh, you need to explain that," right? And you were saying this is probably one of the worst things a trader could do that would sabotage their trading and results. What was that? What is that? What were you saying?
For me, you kind of asked we were going over our morning rituals. And for me, one of the worst things, one of the times I've made the worst mistakes trading is when I wake up in the morning, I don't meditate, I don't take care of myself, I don't work out, I don't do the shower, I don't do my rituals. I immediately pull up my phone or my computer, I look at the market, see what it's done, and the market looks at me, does something, I look at what the market's done, I panic, I either take a trade or I get out of a position. And almost universally, the worst mistakes I've made trading have been that. So for me, I always try to tell people, you have to get into state before you look at the market. The market will do things to you if you let it. So for me, I always try to understand that I want to put my body and my mind in a good position. And that sounds, that's literally not like some new age stuff. I literally have to get my body in a position where I can deal with stress. So when I pull up the market, I'm in a healthy place, my breathing's right, my heart's right, my brain's right. So I can actually use my prefrontal cortex as opposed to my amygdala panicking. And so being able, for me, I have to, because I love trading, I have to stay away from it, because otherwise I can just see it and go, oh, wow, here's a trade, boom, take it, and then lose money because I'm excited. So for me, I always try to tell people, like, watch your screen time when it comes to the market. Understand that you're about to go. I always kind of look at trading as a sport, because again, it's something that happens to your body. So for me, I think everybody who's ever played a sport, we almost have these rituals of getting into state, before we go in the game. And you really want to do that when it comes to trading. You really want to be in charge of your body and your mind, where you see something and you're going to be relaxed and just take it as it comes, as opposed to pulling it up and then let the market do what it's going to do to you and make you feel certain things to make you elicit certain decisions. So
now, I remember when I was running a fund, I remember putting on a trade, and there was somebody I knew that was in the pit, and I remember placing this trade, and somebody said to me, this person said to me, Patrick, they can see your trades. They can see your orders, right? And I says, don't be so ridiculous. Says, Patrick, do you know they know because of the size that you're placing, they can see your trades? And I remember there was a period of time when I was putting trades on with like big numbers in the bond market, and I'd see the market just go directly from where I got in, directly straight down to the stop. And I'm talking, this was a big stop, right? Right, big stop. You could have paid off your mortgage with this sort of stop, right? and then go back the direction. I thought, wait a minute, what's going on here? What's going on here? And I go, okay. And it kept happening. Then I discovered that, I don't know if I'm supposed to be saying this here. I think, what's his name? Who writes those books called what's his name? Who wrote turned it into a film.
Flash Crash or the
Flash Crash?
Yes, yeah.
Right. The Flash Boys and stuff like that.
Flash
right?
Boys, that's it.
Yeah, that's it, right? I think he spoke about this. What happens is HFTs were paying brokers to execute trades for them, and they could see your both sides of the order, and they were providing liquidity in the markets, and so they had a huge edge in so many different ways. I highly recommend everybody reads their books and discovers how HFTs work and why they are profitable 99.9% days. Right now, with that said, that's a long way of me to ask you this question. How does a retail trader beat HFTs?
The way a retail trader beats HFTs, or the way any trader, this is how I look at it, is if you look at it as uncle, they have if you have to work on large time frames. An HFT, if you think of a day or if you think of an hour as a large time frame, that's you're going to get killed, because at that point it's relatively simple for a computer program with enough money on the sideline to manipulate the market. They will happily employ hundreds of millions of dollars to drop the market artificially just to get your stop and then move on. And they'll do it automatically. You can't beat them. They're quicker than you. They're faster than you. And yes, they're smarter than you. And for the retail trader, look at the longer term time frames. Whereas a HFT can go up there and hit a couple days stop, or stops based upon days, or even the 2 days. But for my strategies, and I think anybody else is successful, I just make sure that my positions are sized so they can't, if they want to go after a weekly stop, good luck to you. If you're going to move that much money to go after my relatively small stop, okay, that's a lot of money. That's hundreds of billions of dollars to move the market that much. So for a retail guy, you are forced to look toward the long-term trends, because to move it relatively to a day or 2 days, some funds, HFTs, have enough capital and enough wherewithal to do that. However, with weekly trades or monthly trades, that they require so much capital to move the market that much for relatively small amounts of money. And at that point, other firms can see what they're doing and other firms can kind of engage. So to beat the HFT market, you have to get off the day trade and gamble, because at that point you're swimming with sharks. They can move the markets far more. They don't have to. The markets do not have to be rational at that point. They're going to take patterns that you've never seen before, that you can't possibly see before, because at that point they can move the market artificially. However, by using larger term time frames, HFTs at this point they swim in other parts of the pool. Like they're in the shallow end, I'm in the deep end, and never the two shall meet. At that point, by looking at that, that's the reason I'm not concerned about HFTs, because the way I trade is so different than theirs, and my time frames, my frame of reference is so different than what they look at. That's the way I avoid it, and that's the way I think most retail traders should avoid it.
So you've got this, you've got like a institutional perspective on things,
Yes,
and
I do.
You've got also the retailer's perspective on things, so you can see things from both sides. So what would you say are the top, from a retailer's point of view, the top 1 to 3 things I've ever said to you that have influenced you in your trading?
Retailers, psychology, focusing on that.
Yeah.
I cannot stress that enough. Just the ability, psychology, backtesting, and just understanding as a retailer, it's a business. That can be the big edge, is that if you are a retailer, understand that you are now opening up your own new business. You are an entrepreneur by definition. And your business has one client, you. And your client hopefully will listen to you, will talk to you, will understand you, and will not panic. And comes in, you can manipulate that client to do what you want them to do. Whereas if I'm an institution, I have any numerous clients that all have their own perspectives, that all have their own marching orders, and I have to make all of them happy. And that's a lot harder than it sounds. And so for retail traders, understand, 1, your psychology, 2, it's a business. And those are the things, and honestly, 3, psychology and business again, because those are, I cannot stress that enough, that you have to level. If you think this is going to be a hobby and go in there with the great, it's going to be a very expensive hobby. It's going to be nice, but you're not going to make money. It's going to be fun, but you're going to be trying to go to the golf course and just hit around with a bunch of professionals who do this for a living. You have fun. It'll probably cost you some money, but you won't make anything. So understanding those 2 things, the professional nature of it, regardless of, oh, well, I just have $30,000. It's just my play account. Great. You're going to lose it at the long run if that's your mentality. But it's a business and the psychology of it. And if you understand your advantages and those being your advantages, then you can do quite well. So that would be both from a retail and an institution. I guess for me, my retail came from having seen institutional guys and seeing the advantages that you can do asymmetrical risk. You can take positions that an institution can't, that I can't. So like, I think understanding that is the big advantages the retail guy has.
You keep saying something, and I'd like you to stress and point out why. Why is trading a business for the retail trader? Because someone's going to say, oh no, just sit at home and put the trades on. But why? Why must they see it as and structure it as a business to be successful at it? Why can't they just sit in the house, put a trade on?
Because it's inherently competitive. Because I look at it as a business, and you are competing against me, and you are competing against a world of very smart, very driven guys who love this. I do this. I would do this for free. I love this stuff. And you're competing against me. And it doesn't matter how you view it when you press the button and put money in the market. I take it very seriously. Goldman Sachs takes it very seriously. HFTs take it very seriously. And we take your $10,000 very seriously. And you don't get to play it's not a kiddie pool. You don't get to pretend that you're not going up against everybody in the market. And if so you have to trade it with a business. And if you're not excited by that, don't get in this game. If you're not interested in that competitive nature, don't play it because you'll lose. So that kind of, well, I don't want to do that. Well, then you probably don't want to trade. And I would suggest go find other things to do it, or just, play paper money, which honestly could be very fun. But doing those kind of things, like I guess for me, like you have to treat it as a business, because everybody from the broker that you're dealing with to the people you're trading against to everybody in the market, we all look at it as a business. We all taking it deadly serious. Every dollar I put in the market matters. And so that's the mindset of the people, that if you want to make money, you're having to go up against people who view that way. So that would be, for me, that's how I would view somebody who does a business is, hey, it's money, it matters. You're going, there's no way to hide. There's not like an amateur market. So that would be the example I would have for the average retail trader is like, if you want to do this, congratulations, you're now an entrepreneur.
Nice. Now, I've got one last question for you. Do you believe traders are 100 trades away? I say you're only 100 trades away, right? And my teaching goes around saying, here's how you structure everything so that you're only 100 trades away from going from financial freedom, from mediocrity to freedom to creating generational wealth. And you can do that in 100 trades, right? That's what I teach. But do you believe people are only 100 trades away from achieving their financial goals?
Absolutely, with an asterisk. It depends on the kind of trades. Are you 100 day trades away? No. Are you 100 trades that, hey, I from here, day one, all I have to do is go take 100 trades. Let's knock this out. No. You are 100 trades away after you created the right psychology and after you created a profitable, high expectancy system based upon your own unique psychology. Once you figure that out, yes, you are absolutely 100 trades away. I always tell people, like, hey, take out your calculator, take out your phone, put on the calculator, press equal 100 times after a trade. If you make 2R every trade, 1, 2, 3, 4, 5, great. Your expectancy is 1.4. That's the number. And it's shocking. So you are 100 trades away. The thing is, you are 100 right trades away. You are 100 trades within a right system. So start creating the system, and after that, the trades just the trades take care of themselves. But absolutely, like you absolutely could be 100 trades away. It's just basic math. Once Albert Einstein said compounding interest is the most powerful force in the universe. He's right. And so just taking that and 100 right trades away, and I don't mean winning trades, I mean the right trades. Absolutely.
Brilliant. Anthony,
yes,
you're
sir.
A star. That was brilliant. I want to thank you for that. I want to thank you for sharing this, and I want to thank you for your time. Bam! Done. That was badass, Anthony.
Oh, thank you.
Hi, it's Patrick Stockhausen here. Did you enjoy this episode? Good. Because if you did, there's 2 things that you can do right now to continue your journey. The first thing is you can subscribe right here, right now to my channel on YouTube. And I'll keep sending you on a regular basis, on a weekly basis in fact, information, powerful information to transform your trading behaviors and transform your wealth and trading mindset. Plus, you will get specific things that you can do to become a consistently profitable trader. And all you have to do is press subscribe right here on this YouTube channel to get that information sent to you every single week. The second thing that you can do this right now is you can go to takingstock.biz, sign up for any of the priceless free trainings. When you subscribe, you're going to get literally hours of priceless free trainings, updates on my latest findings, what will empower you to create the results that you desire, and everything else that we do not do on this channel. If you'd like to do that, just go to takingstock.biz, B-I-Z, do that now. I look forward to seeing you in the next video. Till then, empower your mind, empower your financial life, so that you can live your version of an inspired life. Take care for now. Bye-bye.